Hey everyone, welcome back to the Mark Loeffler Experience. We got a great show here for you today. I got Andrew Hines, my good friend, back from Florida. We're going to be talking about economics. We're going to be talking about inflation, housing market. We're going to be talking a couple predictions where we think the market's going. So guys, enjoy. Make sure you smash that like button. Let's get 1,000 likes for Andrew being back in Canada. So Andrew, welcome back to the show. Always happy that you're here, fresh from Florida. Yeah. So we're gonna do another episode later, and we're gonna talk about this. But today, obviously, we're gonna cover Canada, the economy, the housing market. We're gonna make our fretful predictions once again, and yeah, let's get into it. So welcome back. What are you thinking? What's going on?
Well, I mean, just kind of a quick overview. It seems like Ontario, there's some markets that have slowed down a little bit, but we're all still growing. You know, kind of a lot of the trends we've talked about, we still see happening. We see, a certain amount of slowing in areas like Hamilton, areas like, well, Toronto's actually still quite hot, but just where it's a little bit more expensive, people are less eager to buy. So I still see a lot of people flocking to outer markets. London is still extremely hot. Any market where it's a little bit more affordable, people are flocking, and it's still going up. So yeah, we're going to really get into this because there's a lot of things that are going to affect this going forward.
Yeah. So I mean, we're jumping right into housing, but there's monthly home sales, as you can see. So we hit 70,000 in March, and then we're back down to 60,000 home sales.
Yeah.
And you can obviously, looking at the monthly averages, I think if we did this might be just a bit more of a steady climb instead of a steep drop, which was March last year. And then obviously it came roaring back. And then by the summer months, we were into it and then figured out. But I got this, cool thing on. This is just Oakville, because this is how I know how to get. But like you can see, this is listings. So what's that? May 2020, there's 273 listings in all of Oakville. And then obviously it came back on strong, but like you can see, like there's 258 in December, right?
Those are new listings though, so that's not
brand new listings, not sold, none of that type of stuff, right?
Yeah. So we're getting less new listings, but we're selling more.
Yeah,
this has been the trend for pretty much the last 12 months now, right? And we've talked a lot about what's the reason for that. Like why now? We can identify that interest rates are low, and we have had pretty consistent immigration into the country. So there's a lot of people who need housing.
Yeah.
Do you see another carrot here dangling that's causing people to spend this way? To go after new homes?
Well, there's a couple of different things. Obviously, we're going to talk about a bit is the inflation aspect, right?
Mm-hmm. But wages haven't gone up. Not the way that inflation's gone.
I mean, we can go back to the video I did on interest rates basically driving this market, right?
Yeah, interest rates do drive it.
Like the difference between a 4% interest rate and a 1.5% to 2% is a couple $100,000 on a mortgage, right? And most people don't really care about how much they're buying. They care about their monthly costs.
Well, but qualifying rate is still there, right? You still have to, and I know they're tightening up that restriction, but you still have to qualify at approximately 5%, even though you're buying at and
that's why, in my opinion, I don't think we're headed for a cliff. Like, I don't think this is like 2008 style U.S. headed for a cliff, right? And I mean, you can look at the numbers there, and you can basically look at like the listings to sales were going down their listings were up, sales were down in 06, 07, prices were still going up.
Right.
I mean, we are starting to see that a bit more here. Like we're starting to see some more inventory come on the market.
Yeah, a little bit more inventory.
In most markets. I mean, listen, I'm trying to buy a vacation rental in Canmore right now, and I've been outbid 3 times.
Yeah.
So...
Well, at the end of the day, like if we look at our factors, people still need a place to live. We still have more people that want a place to live than we have houses available. New construction starts are being affected now. Supply chain issues are affecting ability to build. So we're slowing our ability to bring new product on the market, and we have already a voracious demand for the existing product. So where's it going to go? How does that ever change? Unless people start leaving Canada or out of this market, how do prices fall significantly? I think they can stagnate. I think people can spread to other markets like Sudbury, and we're seeing that. Those prices are going insane in those northern markets now too.
Yeah. Well, I mean, we have a portfolio of properties we've listed in Kirkland Lake.
Yeah.
And no offense, Liz, but I mean, there's some work to be done on the properties, right? Which a lot of people do like. And like we're getting multiple offers on everything, and I think we're pricing it correctly, and we're not like setting these up for bidding wars.
People acknowledge this. It's human nature, right? If I can't find a good deal here in Oakville or in Toronto or in Hamilton, I go out. And being very in tune with the investor community, I see nonstop posts of people investing in northern markets. I see wholesale deals coming out in the northern markets, your North Bay, your Sudbury. It's only a matter of time before they go out of province, which they are. It's happening in Alberta. We're seeing a consistent increase in prices there. Then where, right? I mean, I'm looking at a country now because I look at it and the numbers don't make sense to me.
Well, and we can talk about that a bit too, is the Canadian dollar.
Yeah.
Right? Obviously, the Canadian dollar is high because of commodities. Like, I mean, we have what the world wants right now, and like copper and lumber and gold, oil, they're all rising, right? Like, I mean, oil's still not like, I think it's kind of at a sustainable level, but I mean, if it gets to $100 a barrel, do we see an even par dollar again? What do you
selfishly, I want that for a moment, but I do think that could happen. I mean, especially combined with the weakening of the American dollar, and they're printing, although we're printing pretty aggressively too.
We are.
So it's like race to who can print more money and do more economic quantitative easing.
Well, I mean, the difference is like, so in the States, they have about a 4.5% inflation, where the CPI numbers just came in here, and what are we, like 3.4 year over year in April?
Yeah.
And a lot of that was because we had a significant price drop in last April, right? Like that's when we were a stay at home across the country.
Right.
Nobody was driving anywhere. Nobody was doing anything. So prices just fell through the floor. I mean, we can kind of see that in the real estate. It kind of fell through the floor. And like, I'm just pulling up the year over year Canadian prices here, and like 42% for Canada as a whole. BC's down a little bit. I mean, Alberta's 20%, Saskatchewan's 15%, Manitoba's like 14%. I mean, you look at it. Look at Ontario. 46%.
We have to put that in context, though, because April was the slowest month of 2020.
Yeah, that's right.
Yeah, but I mean, still, it's going bonkers. I mean, you look at month over month, look at the 5-year average.
All I want to say, though, is if you had just watched my channel last year, if you were one of the few, I mean, I'm huge now with, I don't even know how many, 2,700 subscribers. I don't even know how many subscribers we have.
I think you're almost 4,000 now.
Almost 4,000. There you go. I don't even know. I don't pay attention to that anymore. But yeah, now, if you were one of the early people and you were just an adopter of what I said to buy real estate last year at that time. And I said, you look like a genius. And if you did that in Ontario, like you put 20% down.
In fairness, though, anyone who's bought real estate in Ontario in the last 5 years has looked like a genius. Actually, 10, really. Yeah. But really, mostly the last 5 years is the statement.
I'm going to be interested to see this when we do this next month, what this chart's going to look like year over year, right? Because that's when we start.
That was when it picked up.
Like in April, I remember last year, there was like a 2 to 3 week period where like you got a heck of a deal. Yeah. And then you got an okay deal. And then by May, it was silly again.
Yeah. Well, I think, so just going back to the inflation topic, I mean, we look at consumer price index and you say, well, the U.S. reported higher inflation, which, you know, is going to help our dollar, that report. But that's just what they're willing to admit to, right? It's not packaging in real estate, which is one of the most significant drivers of our monthly expenses. So there's so many things left out of that index that really don't tell us true inflation. Yeah. And what I think is coming, and I think we're roaring towards it, is a real situation where it's going to make it very hard for those who don't own assets to keep up.
Wow, I mean, we're seeing that already, right? Like, I mean, just in comments on my channel, I see that where people are like, wow, everybody should own a home. And I'm like, everybody should own investments.
Yeah.
Personally, I don't care if I own my own principal residence, except in Canada, it is one of the best tax benefits out there. So I will say that. But for me, I don't care if I own my own residence.
Me neither.
Yeah, I mean, you don't.
I would like to. I would certainly like to. But I mean, for me, it always was, how do I set myself up in the best possible situation to have a stable, sustainable cash flow, you know, coming into my life every month, and also protect my wealth with assets. That was the big thing. So if by not owning my own home, I could buy more real estate, which really was the case for me. That's what I did.
And that's what I say to people is like, if you can't afford to buy where you want to live,
just buy somewhere else.
Rent and buy somewhere else. Go invest somewhere else. Like go to Alberta. Go to, I mean, out east people are doing. Go to Florida. Go to Arizona, right? Like there's so many areas that you can go and you can find properties
where the numbers make sense.
Where the numbers make sense.
It's all about, are you looking for a needle in a haystack or are you looking for a needle in a stack of needles? And the investors that focus here in, the GTA, they're looking for that needle in a haystack, which you can still find a great deal. But you have to work for it, and you got to know your stuff.
Oh, yeah. I'm buying apartment buildings in Edmonton. We just got another 23 unit under contract. And the difference out there is I go out there and I look at 5 or 6 different apartment buildings. And I'm one of 1 or 2, maybe 3 people making offers, and we're all fairly reasonable people, and we're buying off numbers.
Yeah.
Whereas if I'm in Ontario, one property comes up, and I'm one of 100 people trying to buy it.
Yeah. Well, people can get sucked up in the frenzy, right? They see everybody else wants to buy, and they have FOMO, and they abandon logic. They say, well, nobody's paying attention to the numbers anymore. Now people are just buying on a per unit rate. They don't pay attention to cash flow anymore. Well, no, they should. Mm-hmm. Just because they're not doesn't mean they shouldn't be, in my opinion. And that's just sound investing. Otherwise, you're speculating. Yeah. Which, hey, speculating, some people win until you lose.
I want to kind of take this back. So inflation, obviously we talked about money printing.
Yeah.
What's your opinion on where inflation is going to go for the rest of the year?
Rest of the year, I mean, I think that we're going to see a pretty decent jump in food prices. We're going to see, pretty much everything we're using on a regular basis, under 10% maybe, but an increase towards the end of the year.
So it's funny though, food prices is one of the things that hasn't even risen that much right now.
According to the official numbers, but I challenge people in your grocery store, look at your bill. And do you notice you're paying more? I could say, from anecdotally, I can say definitely I notice I'm paying more.
I'm paying more because my kids are growing and eating more, and I got 2 puppies, and we feed them raw food, and so I buy more stuff. But so it's going to go.
Yeah, it has to.
It has to.
Well, you have to think about the contributing factors. We have supply chain disruption. In Ontario, there's restrictions on, so migrant workers, when they come in, there's restrictions on how many you can have in the bunkhouses. So we're going to have compromised crops here in Ontario, which means less supply, which the demand's not going anywhere. People still want to eat. Yeah. So when you have less supply and more demand, people are just going to jack the price. That's all that can happen.
Well, it's what's happening in the housing market.
It happens in everything. And if you break everything down that way, with oil, we have less production now than we did a year ago.
Yep.
There's only one way for oil prices to go. They have to go up. Therefore, gas prices have to go up. So we're going to see a lot of rise in energy costs. So now is really the time for entrepreneurial people to buckle down, make sure you have assets, and really increase your income. Yeah. Really focus on increasing your income.
Yeah. Well, I mean, I totally agree that I think we're going to see some pretty good inflation coming through. And I think the official numbers are going to hover in that 3 to 4% range. But again, it's like lumber.
Yeah.
Like lumber's up stupid, like 300%, right?
Will it ever come back down? I mean, it's a great time to own a lumber mill, man. I wish.
Well, it's so funny though. It's so funny though. Like I was watching something on the US or something, and they were blaming lumber prices on the Asian beetle.
Okay.
In BC. And I remember that being 10 years ago.
Yeah.
I remember like Don Campbell talking about that 10 years ago because it cleared out huge tracts of forestable lumber, like whatever the lumber, right?
Yeah.
And it was they couldn't use it.
So I've heard a handful of explanations. I haven't heard that one, but I've heard compromised practices within lumber mills, and some lumber mills have been shut down. I've heard that. I've heard people say, "Well, everybody's at home, so a lot more people are doing deck projects." So I'm sure there could be.
You can still get lumber.
You can get it.
Yeah.
As long as you're willing to pay. I mean, I was looking at old invoices from last year. I bought lumber, a bunch of it, in I think it was July or August, at $3.39 a board for the fence boards. Now they're like $7. I mean, that's just one example. You can find examples like that.
They're all like that. Yeah. It's going to cost people more to build.
Therefore, more to buy the new home.
More to buy the new home.
Therefore, drives up the resale price too.
Yeah. What do you think interest rates? So Bank of Canada said they're not going to raise until the first quarter next year.
I mean, even if they think they could do that, I don't think that's a wise idea for... It's kind of like economic suicide if they increase it too much. Because how do we service our national debt?
Well, they've already talked about they want full employment back before they even touch it. So if there's an inkling that we're in the 4th wave lockdown and you went back to Florida because why wouldn't you? they're not going to raise interest rates. I mean, I think that's more what they're looking at than ever even inflation or GDP. They're looking at the employment.
I think they'll raise it as much as they think the population can tolerate. If there's pushback, if people make a big stink about, hey, this is too hard on our style of living, our cost of living, then they pull back. Because I remember,
listen, we're Canadians. We don't do that. We're not like Colombians where they get a tax increase, they go riot, and then the president said, you know what, I was wrong.
So we mostly just accepted, if we need to do our part. So then very well could see an increase in interest rates next year. And
I think we're going to see it next year no matter what.
They said that, though. They kept saying we were going to see interest rates rise.
2022. They've been talking 2022 for a while, and then they've just said, well, we're doing better than we thought, which may or may not be for some people. I'm not saying that, but I mean, GDP numbers are up, but that was before the lockdown again. Yeah. So if we reopen and we don't have to lock down again.
I'll put it this way. Back in 2006, 7, the average interest rate was, 4 or 5%. That was normal, up to 6. And then we had a new playground down in the 3% range after that. And they kept saying it's going to go back up one day. It never could. Every time they thought about it, it affected GDP growth, and they just decided not to do it.
They can't stay at this level.
You would think so. There's a big difference. There's a big difference between real GDP and nominal GDP.
Yeah.
And they'll say what our real GDP is based on adjusted for consumer price index, which is inaccurate because it doesn't get the whole basket.
100%.
And so ultimately, if we really acknowledge that our GDP isn't growing like we think it is, we shouldn't be increasing interest rates. But then that's the rock and the hard place because it affects our currency, it affects inflation, and unless we want to let this inflation get out of control, we've got to do something.
Listen, I'm happy if the dollar goes up to $1.10 again for the US dollar. I'll go buy a whole bunch of stuff in the US, and then it can go back down to 60 cents, and it'll be great for manufacturing. And then
that'd be okay.
You make 50% on the currency plus whatever the US real estate does.
I think the real lesson to learn right now is we've got to hedge our position no matter where we're at, right? We can't predict. We can speculate all we want, but I mean, for me, I thought getting money into the US was a great opportunity to hedge against what Canada might do. And now I have a hedge, I have money in Canada to hedge against what the U.S. might do. So, you can do that interprovincially, and internationally.
All right. One last prediction.
Yeah.
What's real estate going to do let's start BC and go across for the rest of the year?
It's the simplest way I can put it. I mean, I think we're going to see consistent growth in all the markets, but I think it's just going to be outpaced by the smaller markets, the tertiary, the secondary markets. I think those are the ones that are just going to keep growing at the highest pace. And then you see kind of like water going to the lowest point. You'll see markets like Windsor just go nuts as it has been until it catches up to all the other markets. So like I've always been saying, kind of beating a dead horse here, but wherever infrastructure exists, wherever there's a solid, streets, sewers, municipal services, those markets are going to go up fast if they're in lower price points compared to the larger markets.
So I'm going to put this out there and not putting my money where my mouth is because I'm doing this right now. Is I think we're going to see the commodity provinces shoot up.
Yeah, I think Alberta is poised for huge growth. So if I was focused on Canada, as I've said repeatedly, I would be focused on Alberta and I would be focused on New Brunswick, just because of relative price point. I know it's not commodities, but Alberta for sure, the commodities are going to drive it, but infrastructure too.
People do ask me that all the time, Mark, why aren't you looking at New Brunswick? And for me, it's the economic fundamentals.
Yeah, it's shipping, but other than that, it doesn't have
I don't see the industry out there. Obviously they're the third highest price increase year over year too, right? And that's just not normal out there.
No,
for that, right?
But so that's why it's relativity. That's why
it is relativity. When you go to 100 to 140,000, I mean, I get it, but I would rather stick in that where
fundamentals.
Fundamentals.
I'm with you. I totally understand that, and if I was focused on Canada right now, that's where I'd be.
Good.
Not advice, anyone.
Not advice. Do what you're going to do. But I mean, this is where I'm investing in Canada right now. And all right, thanks everyone. See you guys in the next one. If you love Andrew coming on the show, let's get him 1,000 likes. Okay, 1,000 likes for Andrew. Thanks, guys.